Good evening, this is Business Day right here on ET Now. I'm Avan Dabash. A quick look as to how the market shut shop this Monday before we take you through the top headlines. Well, a great day and no complaints whatsoever. A great start to the week given that there have been good macroeconomic data as well as the earnings season in the full swing. So you had the advanced decline ratio, which was firmly in favor of the gaining side. You had a steady sectoral up move, which came in for the equity markets. The government deferred the GAR implementation to 2016. That also augured well for the equity markets. So 6,000 was conquered. 6,024 is where we shut shop, with the Sensex higher by 242 points at 19,906. So we keep you up to speed with all of the top stories from corporate India after the top headlines. In a major relief to markets and companies, the government defers GAR implementation to 2016. Finance Minister P. Chidambaram says most of the SHOAM panel's recommendations have been accepted. He will move a new bill in the budget to this effect. GAR can only be invoked on investments made after August 2010. The Finance Minister said GAR will override all existing tax treaties. Experts say the GAR deferral will not have any impact on the $2 billion tax dispute between the government and Vodafone. Inflation eases to a three-year low of 7.18 in December, making things easier for the central bank to cut interest rates in January. Experts say with core inflation hitting a 20-month low, the overall inflation may fall below 7% by March. TCS surges more than 2% ahead of its third quarter numbers later today. The IT major is expected to post revenue growth of nearly 3%, while the net profit is expected to dip sequentially. Labour unrest hits Hero MotoCorp yet again. The workers seek a steep hike on the lines of Maruti's wage settlement last year. The company's management says negotiations are currently on. Those are the top headlines at 4. Let's take it straight to the big story of the day. And the government has postponed the controversial rules on tax avoidance, or GAR, by 2 years. This means that the GAR provisions will now come into effect from the 1st of April 2016, from the earlier date which was set of the 1st of April 2014. Finance Minister P. Chidambaram says that this decision was taken following the recommendations of the SHOAM committee. A new bill in the budget will be moved to this effect.
The provisions of Chapter 10A will come into force with effect from April 1, 2016. Investments made before August 30, 2010, the date of introduction of the Direct Taxes Code Bill 2010, will be grandfathered. A monetary threshold of ₹3 crore of tax benefit in the arrangement will be provided in order to attract the provisions of GAR. The government has carefully considered the report of the expert committee. The major recommendations of the expert committee have been accepted with some modifications. GAR will not apply to such FIIs that choose not to take any benefit under an agreement under Section 90 or Section 90 capital A of the Income Tax Act. GAR will also not apply to non-resident investors in FIIs. If there is a tax avoidance arrangement, the existing provisions of Chapter 10A do provide that the GAR rules will override any treaty provision. These are the modifications we're making in Chapter 10A. So you have to now read Chapter 10A along with these modifications. But I'll have to introduce a bill in Parliament to make these modifications law. At the moment, they are decisions. Once Parliament approves these modifications, then you will have a modified Chapter 10A.
So this means that a big overhang for the equity markets is now out of the way, with the Finance Minister watering down the draconian anti-tax avoidance laws. Let's get in Mrinalini Krishna, who joins in now for more details on the same. Mrinalini.
The government has decided to defer GAR by 2 years. It will now come into place from 1st of April 2016 rather than 1st of April 2014. In fact, the government has also said that any investments made before August 30, 2010 will be grandfathered. They will be kept out of the ambit of GAR. In fact, there has also been a monetary threshold which has been set at 3 crores of tax benefit where GAR will be invoked. Apart from that, the finance minister has made it very, very clear that in case there is a tax treaty with a country where this arrangement is happening from, then the GAR will override any of the tax treaty or the SAR if there is a case of clear-cut tax avoidance. The definition of where GAR will be invoked has also been tweaked a little, saying that if there is an arrangement where the main purpose is tax avoidance, that is when GAR will be invoked, rather than the earlier definition where it said if tax avoidance is one of the main purposes of the arrangement. Also, as far as FIIs are concerned, those FIIs that do not take the benefit under Section 90 or Section 90A of the Income Tax Act will be exempt from GAR. Non-residents investors in FIIs will also be kept out of the ambit of GAR. The new norms also define the constitution of the approving panel. The approving panel's decision will be binding on the assessee as well as the Income Tax Authority, and timelines will be prescribed for various authorities under GAR. The important thing here is a lot of experts believe this is a watered-down version of GAR, but Finance Minister clearly is saying that this is a version of GAR where all concerns of investors have been allayed, all of their fears have been addressed, but the revenue generation for the country has not been hit. So clearly this is something that will soothe nerves as far as the investor community is concerned.
Okay, thanks very much, Mrinalini, for giving us those details. In fact, we spoke with Dinesh Kanbar, Deputy CEO and Chairman Tax at KPMG, who says that the government accepting the Shom panel recommendations comes as a major positive.
I do believe that the fact that the government is accepting these recommendations is a significant step forward. From the GAR implementation perspective, but more important, the government set up a series of committees to bring about reforms in tax, and the fact that these reports are now being accepted is an important step forward. All investments prior to August 10 are grandfathered. That shows that people who made investments under an existing regime will be protected under that regime. That's a very, very welcome step.
That was not the only positive that we had today. In terms of macroeconomic data, the December WPI inflation came in at a level of 7.18% versus an ET Now poll of 7.2%, and that really cheered the equity markets. You had the Nifty, which went on to conquer the crucial level of 6,000 on the upside, and the Sensex too, which gained quite a bit of traction. All in all, it was a sectoral up move, so you had most of your sectoral indices which were firmly in the green. Realty as well as the IT pack continued to lead your gains. On the downside though, auto was a bit muted, as was the healthcare sector. Some of the big gainers, DLF, take a look at the kind of up move you saw. Strong volume traction, 7%. Remember, JP Morgan maintained an overweight stance, upping the target price to 300. ONGC added a lot of support to the index, and it was IT all the way. So the likes of HCL Technologies and Infosys too lit up the screen. Remember, CLSA has upgraded Infosys to outperform from underperform, raising the target price to 3,100. Results for today, you had Muthoot Finance, and the street was clearly pleased with the kind of numbers that it doled out. The Q3 profits came in higher by 7.6% at 270 crore rupees. The total income came in at 1365 crores, that's higher by 11%. Vakrangi Software too put out its quarterly numbers. The profits on a sequential basis were higher by 33.6% at 32 crore rupees, and the sales came in higher by 7% at 389 crores versus 361. Moving on then to some stocks and news. As pointed out, ONGC was a big support to the market as OVL's Venezuela oil field has started production, and it aims to produce 30,000 barrels per day in the first phase itself and 90,000 barrels per day in the second phase. That went down very well with the street. Titan Industries, Rakesh Jhunjhunwala bought 50 lakh more shares in the company, which means that the overall stake is now at close to 8%. Jewelry stocks really glimmered in the session, so the likes of a PC Jewelers, a Goenka Diamonds, as well as a TBZ shot up very smartly in today's session. Jaiprakash Par, that was down. It was a result reaction. Remember, they put in a Q3 loss for the third quarter at 98 crores versus a profit of 60 crores last time around. The revenues were higher by 8% and EBITDA came down 25% at 268 crore rupees. Moving on, then you had Geojit BNP Paribas that also came out with its numbers over the weekend. You had the profits which were up this time around by close to 202% at 13 crores versus 4.3 crores, and the consolidated income coming in higher by 15% at 67 crore rupees. Alok Industries will be selling their Czech subsidiary Mileta according to news reports, which has sales of close to 18.5 million euros. Arshia International, absolutely no respite. The kind of thrashing that has been seeing only accelerated. So today it was lower circuit once again, despite the promoters coming out and saying that they will be monetizing their assets and raising 130 crores to revoke the pledged shares and invest in the company to tide over their financial woes. Some of the big index losers for the day included the Lupin. The Auto Pack, as pointed out, was a bit muted, so Bajaj Auto was also in the red, as was Maruti Suzuki. Ken India didn't add to the cheer. But on that note, it was a pretty steady day for the equity markets. Time to find out some of the top picks and strategies for 2013.
Look at the way the government is kind of, waiting to announce things positively every day. I mean, you have the divestment calendar, which is more or less crystallized. You got the Shom, committee recommendation being accepted in a very decisive way and signaling the fact that we are welcoming FI money. We'll continue to do so for the next so many years. So very clearly you look at the gas and the diesel pricing issues which are getting tackled. So these very clearly are a build-up to a positive state of, markets. And I think pre-budget we'll probably see that breakout decisively, take it to 6,400 kind of a level.
As for the economy, we're not looking for a big rebound. I think we're looking for about 6.5% GDP growth this year, up from 5.5% next year. I would expect a 25 basis point cut, but perhaps not the 50 that the consensus is looking for, precisely because there are a number of issues that remain outstanding in terms of the twin deficits and inflation.
Okay, what about the F&O activity and how did that pan out today? We've got Navneet Saluja. She's standing by from our research team to fill us in. Navneet.
Hi, Awan. It was a good start to the week. Have a look at Nifty January futures. They surged almost 86 points today and they closed trade at 60.64. Look at the premium, that too expanded to 40 points today. Huge amount of long positions were being built up. The Nifty January futures added above 10 lakh shares in today's trading session. And if you look at the options data, the Nifty PCR surged to 1.07 compared to previous closing of about 1.04, clearly indicating aggressive put writing was seen in today's trading session. If you look at some of the call strikes like 6,000 and 6,100, open interest shedding was seen there, clearly indicating the call buyers, they booked their profits today. And on the put side, aggressive put writing seen at levels 5,900, which added close to 12 lakh shares. You had the 6,000 strikes, significant addition of about 19.2 lakh shares was seen in today's trading session. And talking about the stock futures, most of the positions were being built up on the long side. Well, from the Nifty gainers, you had the likes of DLF and ONGC, which surged, so long positions were seen on the future side. You also had the entire IT pack again, which was up. Infosys had another 3% run up in today's trading session. TCS built up long positions ahead of the numbers, which will be out any time now. Also, HCL Technologies had a good run up. And from the banking space, you had Punjab National Bank and HDFC where long positions were seen, while a couple of pharma counters like Lupin and Cipla were down, so short positions seen there. From the mid-cap space, you had JP Power, which reacted to its numbers, short positions seen there. And mid-cap banking counters like Union Bank, Bank of India and Allahabad Bank, they had a good trading session and the markets went up all in all with good participation. The turnover was about 1.36 lakh crore on NSE by the end of the day.
Thanks very much, Poonam, for giving us all of those details. But meantime, as pointed out, it was pretty good data when it came to the inflation numbers for December. They slowed to a 3-year low at 7.18%. That's down from a level of 7.24% just last month. Experts say that with core inflation hitting a 20-month low, the overall inflation now has a greater chance of falling below 7% by the month of March. Let's get in Poonam Sani, who now joins in from our research team with more details. Poonam, this data is now boosting hope, certainly, of an interest rate cut when the central bank meets later this month.
Very true, Avan. Indeed, the inflation was bang in line with the ED poll, and it is much lower than the month of November. But again, in terms, if you look at the internals, the primary and food articles were expected to decline month on month, and the index has surely declined on a month-on-month basis. But the YOY data does remain a little elevated, as in the month of December of last year, the food prices had declined very sharply. But Rabi crop surely is picking up after a late start. The fuel and power inflation has been subdued because of the moment in the global crude oil prices. Good thing is that the core inflation has really come off sharply from its earlier highs. We're seeing core inflation at nearly 20-month odd low, which is surely a good sign. Also, the October WPI inflation has been revised downwards to 7.3 odd%. But December CPI inflation remains high and sticky at 10.5%, and this is a concern. But in terms of future outlook on WPI and core inflation, Credit Suisse estimates core inflation to fall below 4% by mid-2013 and WPI to fall below 6% by mid of 2013. CPI remains a concern, and bond yields at September 2010 levels are surely factoring in repo rate cut by RBI, but we will have to surely watch out. Does the RBI cut repo rate by 25 bips or 50 bips on the count of CPI inflation remaining high?
Thanks very much, Poonam, for giving us all of those details. Meantime, we're in the thick of earnings season. We're eagerly anticipating India's largest IT service provider, TCS, to declare its numbers. Here's the expectation. Revenue growth is seen nearly 3%, and you have the net profit, which is expected to dip on a quarterly basis. Let's bring in Sunita Nagpal with a detailed insight as to what we can expect. Sunita.
Absolutely, as you said, the revenues are expected to grow at roughly about under 3% in this quarter in dollar terms. This is largely because this is the quarter where number of working days are less, so you will see some impact of that coming on the volume. Also, there was furloughs announced by some of the clients, high-tech clients, telecom and manufacturing, which accounts for roughly about 1/4 of revenues for TCS. That will also impact the revenues for TCS. So we are only expecting 2.7% growth as far as dollar revenue is concerned. In rupee terms, it will be further lower. As far as margins are concerned, we are expecting a 50-60 basis point decline in margins, largely because we are expecting utilization rates to come down in this quarter. Remember, utilization rates are substantially high for TCS. Last quarter it stood at roughly about 82%, so we are expecting some softening on that front. As far as net profit is concerned, we are expecting a 3% decline, largely because there will be some forex losses this quarter. We are expecting a 30-35 crores worth of losses versus a gain of roughly about 92 crores seen in Q2. So that basically will lead to a sequential decline in net profit of roughly about 3%. As far as management commentary is concerned, we are watching out what they have to say about the IT budgets for 2013, how they're seeing discretionary spends to move out. That's the main thing that we'll be watching out. But if you look at the commentary from the management in the recent past, when they talked about the Q3 performance, it was pretty confident, and they sounded that discretionary spends are improving and IT spends should be higher for their clients. So though we are expecting a positive commentary and decent set of number from TCS.
Okay, thanks very much, Sunita, for breaking it down for us and telling us what exactly is expected from TCS. Remember, the counter gained very smartly ahead of its numbers. Labour unrest has hit Hero MotoCorp yet again. The workers are seeking a steep wage hike on the lines of Maruti Suzuki's wage settlement just last year. The company's management says that negotiations are currently on. What is the status? Let's get in Sumit Chaturvedi, who now joins in with more details. Sumit.
Workers at Hero Motors' oldest plant in Gurgaon have started what they call soft protest against the company's policy of giving them low wage hikes this year. Well, workers are demanding wage hikes as high as 50% given by Maruti and Honda Motorcycle Scooters India recently to its workers. While workers have started wearing black bands on their arms, and they are also not participating in many activities of the companies. Well, workers are demanding such wage hikes because these wage hikes happen once in 3 to 4 years. Well, last time it happened in 2008, but it was a low 20%. This time they are demanding more wage hike because the inflation is also more. Well, workers have, however, clarified that they are not disrupting work in any way, and there is no strike also at the plant. But yes, going forward, they can intensify protests.
Okay, they could possibly intensify protests. Thanks very much, Sumit, for giving us those details. Now, after NHAI, it's Coal India that's crying foul over the delays in environment clearances. We understand that about 17 blocks that could yield 45 million tons of coal are stuck waiting for a nod from the Green Ministry since September last year. Coal India has now written to the PMO seeking help. Suchetna Ray joins in with more details. Suchetna, what are you picking up?
We are in January and 31st March is not very far away, and that is why Coal India is very desperate to ramp up capacity. Remember, this year we've seen them mining about 26 million tons additional, and that is why they've written to the Prime Minister's office complaining how the Environment Ministry is sitting on 17 coal blocks for which environment clearance was needed for expansion. What sources in Coal India tell us is that all these 17 blocks, which fall majorly in Orissa and Chhattisgarh, they were given a go-ahead by the Environment Appraisal Committee, which looked into the environment clearance that should be given to these 17 blocks. So, and this was given in September last year. So what the ministry has to do, the Environment Ministry, is simply to go ahead and give them a nod for environment clearance, which it has not done in the past 5 months. Remember, 45 million tons is what Coal India can mine from these coal blocks, and that is why they've written to the Prime Minister's office to expedite the matter and to see some kind of clearance coming from the Environment Ministry. But this is not the only time that a company has come forward and complained about delays that they are facing when it comes to clearances that are due from the Green Ministry. Remember, NHAI did it some time back, but this is for the first time Coal India, a public company, is complaining against Jayantri Natarajan's ministry.
Okay, thanks very much, Suchetna, for bringing us those details. Now, moving away from that, in what is a welcome boost to power major NTPC's divestment issue, government sources indicate that the Law Ministry's nod for reallocation of 3 coal blocks to the company is likely to come in before the 10th of February. Let's get in Nithya Balakrishnan with the exclusive details. Nithya, has NTPC's wait for reallocation of the 3 contentious blocks finally come to an end?
Well, Avan, NTPC's stake sale is the biggest ticket as far as divestment is concerned for the centre. They're looking to raise close to 12 to 13,000 crore rupees from a stake sale of 9.52%, which is why we're given to understand from government sources that the Law Ministry is likely to go ahead and ask Coal India to the Coal Ministry to reallocate 3 very crucial blocks of 42 million ton reserves back to NTPC. Now, this has been going on for the last 9 months, with NTPC waiting for these 3 coal blocks for significant capacity addition, and we're given to understand that even though the Law Ministry has taken a long time on it, by the 10th of February they're hopeful to go ahead and actually give this back to NTPC, simply because they want to ensure that investor sentiment for the 9.52% stake, which is up for grabs, is absolutely robust and intact. We're also given to understand that the Coal Ministry is getting ready a plan B, which is basically ensuring that via government dispensation, NTPC is eligible for coal blocks which are going to be put up for auction. That again, round 1, which is going to take place just weeks from now. So very clearly, all efforts being made to ensure that NTPC gets back these 3 coal blocks as early as possible, Avan.
Thanks very much, Nithya, for giving us all of those exclusive details. So that's certainly going to be a boost for the company. Meantime, to the aviation space, the Wadia Group-owned Go Air has until now maintained that it will not evaluate any proposals for FDI. But now the airline seems to be scouting for a foreign carrier for FDI investment. The management has also confirmed that the talks at the moment are in a preliminary stage. Let's hear out the management.
In this environment, Go Air is studying the opportunity. It's something that happened only a few months ago, and the management is focusing on the evaluation of the opportunity. We want a suitable industrial partner that will help us to strengthen our position in the Indian market.
Any regions that you can specify that you are focusing on in terms of looking at investments coming into India? Because Gulf is one of those regions where most of the industry guys are exploring opportunity.
As you know, India is very attractive not only for the Gulf people but worldwide, considering that there is a huge potential for growth. So I think that in our evaluation process we should have an open mind and consider many opportunities, not only in the Gulf area.
Right. Also talking about your international operations, give us a sense and plan for your international operations since you have already completed 5 years. So what is restricting you from going international, and is there any agenda that you have set in your mind for this particular plan?
Presently, the Indian regulation not only imply 5 years of operation, but also minimum of 20 aircraft. We have 13 aircraft in operation, although in 2 weeks' time we will receive our 14th brand new aircraft. We have, notwithstanding, applied for a waiver to the Ministry of Civil Aviation, and we are waiting for the feedback from the Ministry on this opportunity.
Okay, that brings us to an end of this edition of Business Day. Thanks so much for watching. Keep it with ET Now.